Hello, hello, hello. What's going on, everybody? Welcome to Now Stock Trades. How's everybody doing today? All right. So a couple things we're going to be doing. If you haven't watched my videos in the past couple of days and weeks, I recommend watching them because we keep dissecting and building off of every video. It's almost like, we just keep dissecting every muscle fiber, trying to get deeper and deeper. Okay. So in this video, it's going to be pretty complex. We're going to be talking a lot of things. For the longest time, I've been talking about intrinsic value, just trying to show you that, our software works, right? And we're able to calculate the value of a company. Now it's pretty much what I want to do now is just talk about why my investment thesis, why am I bullish on this company? I can't put it all in one video. That should tell you how much bullishness there is. But we're going to go ahead and kind of layer it like an onion, right? So this video is really going to be great, right? So for folks, if I can ask a favor of you, definitely please follow us on LinkedIn. We have about 101 followers as of right now. We need 150 in order to be able to live stream into the LinkedIn community. So we need about 150. It's like a LinkedIn rule. So we need, I need about 49 more. So definitely, if you guys can help us out, reach that milestone, that'd be really great. Because then when I'm making these lives, not only will it go to Twitter X, it will actually also go to LinkedIn. And that's going to be very powerful, guys. Okay, so if we can do that, that'll be very good, all right? So I'm going to remove that. And with that, what I wanted to do is just really quickly, today was a great day. The market's up 7.44%. Interestingly, healthcare was down, Humana was down, but Clover was up. And like I've been telling you, Clover and the tech company Palantir, they've been riding together. So it's almost like Clover's being treated as a technology company, but yet the price to sales have not gotten to that perspective. And I think they're waiting for the SaaS announcement, right? So that's interesting, basically, to see how Clover now is following more of a technology company than actually a healthcare company. And I hope the price to sales starts reflecting that, given the price to sales of Palantir for every dollar of revenue they receive, their market cap grows significantly versus for every dollar a healthcare insurance receives. So kind of Clover's stuck in the middle in between them. That's why I put it in the middle. Now, someone commented on Reddit and said, hey, it's actually following the S&P 500, not tech stocks, I think. So the thing is, if you look at the tech stock, if you look at the S&P 500 as a whole and look at ultimately the biggest weight, the biggest companies are actually in tech. Think of your NVIDIA, Apple, Facebook, right? So yes, it's following S&P 500, but the majority of the S&P 500 composition is actually in tech. So that's why people look at tech as a really good indicator to see how the market's doing. So actually, it's following both because within the S&P 500, you have tech. So I hope that makes sense. Okay. So I hope that is good. What's going on? Clove to retirement. Ethan, we're going to be rich. Popcorn rocket ship. Bay, right? What's going on? Live from Kuwait. Good morning, guys. Look at that. We got Kuwaitis. We got Europeans. We got Canadians. We got Americans. We got Central Americans. We got Russians. We got Asians. We got them all, right? We got Middle Easterns, right? Never used my LinkedIn, but I'll follow you. And I really appreciate you. It's a rule they have to where you have to live stream and you need 150 followers. Then it's 30 days. I think we're on day 15 or whatever, day 20. So a couple more days and hopefully we get to 150 and we satisfy the 30-day requirement of an active program. And then we can finally start pushing out our live streams there so other people can see it on the LinkedIn market space. So, okay. So interestingly, so we'll be talking about this right now, a couple things, but what I wanted to do is just kind of shift gears here, right? This is the Reddit residency page. These are like residents in the United States. And this is a really good read. This is obviously of a resident, Crystal Pest. Why is tech so so bad at hospitals? So in the age of DeepSeek with AI, and billions invested in tech industry, why the F are we using, this resident is very smart. I don't know this word. This resident obviously is definitely linguistic. I don't know what the hell this means. That dilapidated kind of word is that, right? Of building objects of despair. Jesus Christ, man, this girl's smart, dude. Imagine going on a date with her. Damn, dude, he'll feel like an idiot. Dilapidated, right? Damn. And, if you go on a date with this girl, you'll be left dilapidated in a state of despair and ruin, given your IQ, right? Jesus, right? So dilapidated software. I mean, come on, who the hell uses this in their normal lexicon? I have to feel smart, so I use the word lexicon, right? I don't even know how to spell that word, right? you know, define lexicon, right? So, yeah.
The vocabulary.
Hold on. Yeah, so a vocabulary of a person, language, or branch of knowledge. I just had to sound smart, so I had to up my vocab. I got to compete with this lady. I assume she's a lady because Crystal, but could be someone else. I know that word. I must be a genius. Well, she got me, man. I don't know that word. Shoot, right? All right. So I got a dilapidated vocab. All right. So why is everything so inefficient in hospitals for no intelligent reason? I mean, I agree with this person, right? I don't give, an S if the next Tesla can fly. Effing make working in a hospital less efficient and miserable, especially public hospitals. Or do we just, value, stuff like flying cars more than human life? Or simply expect healthcare workers to sacrifice themselves to make it all work despite these inefficiencies? Like maybe use AI to filter out, hey, do you want to order telly page at 2 a.m. or 4, right? So what this person is describing is pretty much the Clover Assistant, but obviously she doesn't know about the Clover Assistant, right? And most likely she's probably not invested, right? So it's stuff, crap like this that makes me certain China is going to surpass the US if it hasn't already. Also, why will I be doing 100% outpatient after training? Yeah, okay, she's very upset. So yeah, there's no incentives to fix this. Making the hospital software better for doctors doesn't bring in more dollars. Making the software better at billing does. Eliminating well, Mr. Fellow, I have some news for you. Clover Health was able to essentially build software that helps decrease costs and make doctors' lives better, right? So the point that I'm basically trying to tell you guys is, in business, and if you go to MBA or if you go to if you go to any entrepreneurial school, in one first part about designing a business is you have to remove a friction point, right? Why, like for example, why do members of the Al Stock Trades Lifetime Access community purchase Lifetime Access? Because there's a friction point, right? The friction point is getting access to institutionally graded data. People don't want to spend $2,500 a month on a Bloomberg terminal, right? And, in terms of getting equity analysis, in terms of from an educational perspective, they don't have over $100 million to get JP Morgan's private equity hedge fund type level of research, right? So we solve this friction point by tapping into the retail community space, showing them that there's a way out, right? And this is exactly what Clover is doing. There's a friction point, and there's obviously a lot of curse words here, and this person's trying to vent, hence why this tag is called vent. You know what I mean? And, obviously she's maybe, on the dating, she's not able to vent in the dating because practically the dumb guys that date her don't even understand dilapidated, right? Maybe, maybe you can go out on a date with her, Clover to retirement, right? I'm sure she'll love your Clover shares, but also I'm sure she'll be able to enjoy a very good lexicon that you have, because I personally don't know what the hell this word is. Like, holy freaking crap. If I was with this lady, I would have to hold a Webster's dictionary just to translate her geniusness. I mean, Jesus Christ, I've never seen this word. This looks like tilapia to me almost, right? I don't know. Maybe I'm dyslexic. All right. The point is this is a friction point. Okay. This is a big friction point. All right. So this AI software is being able to, that's why people use free AI in the outpatient setting. This is why, this AI software is removing friction points, and Clover Health is ahead of that. Okay. So a couple things. Just to be clear, February core CPI came in lower than expected. So today we got the consumer price, was it the core? Yeah, core CPI. This guy holding his eggs, because eggs, it's all about the eggs, right? I like to take care, to me, these are like my Clover shares, right? I like to take good care of them. Here's my long-term stockpile. And the back here is the FU money supply. That's my wheeling strategy back there. Okay, so anyway, inflation data cools in February. The report could help ease, investors' fears about the health of the U.S. economy. Okay, so good. Okay, so there it is. So it signals a cooling inflationary pressures, and with key contributors like shelter and recreation auto insurance showing significant slowdowns. So this goes back to the Manheim Car Index. We've shown that it's actually decreasing. And now we're starting to finally see shelter and recreation auto insurance finally go down. I think now it's finally below 3% inflation, and actually true inflation is below 2%. Some, I think, potential something reached out on the YouTube chats. I read all your comments. Sometimes it takes me a week, but I promise you I read them. If I heart them, it means I read them. I don't heart for no reason. I read, right? So, he talked about true inflation, which is very true. It's below 2. Good job. Most people don't know that. There's a lot of things that I don't talk about on YouTube because I would be talking for the whole day, and I just don't have that time, right? I save that for the research as part of the lifetime access. It is what it is, right? Because I mean, these videos are already an hour long, right? So while market volatility persists due to these tariffs uncertainties, historical patterns suggest that a sharp decline like Monday's NASDAQ 100 drop are often buying opportunities rather than signs of a prolonged downturn. Right. So market corrections can be fast and unsettling, but history shows that after a sharp decline like this, the S&P 500 has always rebounded strongly, averaging greater than 18% gain over the next 12 months. Essentially staying invested is the way to go, right? Time in the market beats timing the market, right? So went ahead and listened to the Clover, Peter, Leerink's conversation here. They didn't really talk too much about SaaS, but when he mentioned about the whole national players, he said, oh, okay, so that obviously got him pretty excited, the Leerink's guy. But they pretty much said that the main markets for MA in terms of the market penetration in the New Jersey market went from a market share of 10% to 12 to 13%. That's actually pretty huge. And then also AEP plan kept benefits stable while competitors reduced their and ultimately removed benefits. Other plans just stopped marketing, and some plans even stopped paying their commissioners that sell insurance to the beneficiaries. And obviously those people are not going to be selling those insurances because they're not getting commission. Why work for them if they're not willing to pay you, right? So the biggest thing is here, the Leerink's guy said something, and I felt this was kind of bearish. He said, is the 1,000 basis points, how long does it take? And there was no clear answer to this in terms of the 700 basis point reduction over a year and a half. He said that it's ultimately relatively stable. So that's actually pretty bearish, and I wish they gave us more information about that. I think Leerink's guy had an Achilles heel for Clover Health, and Peter needs to fix it. So I know you watch this channel, Peter, so I hope that you go ahead and put some light on this because it's kind of worrisome. Okay, so now new cohort membership in Q1. He said that it will be a headwind, meaning headwinds are bad. You don't want you don't want wind hitting your head. You want it hitting your butt so you can move forward. All right, it's all about moving forward. So essentially, this actually falls in line with their flywheel business strategy, which I'll go ahead and talk about. So interestingly, when the inflation report came today, now the rates of a recession cut of no change went to 63%, and then now 25 basis point decrease went to 33%. It would flip-flop recently, so we'll see right now what's happening. The Trump put came into play when Trump started defending Tesla and even lining Teslas in the White House and even purchasing a Tesla, indicating that he's trying to put a specific Trump put on a specific stock like Tesla. So that's interesting because it has dropped dramatically. So obviously the Trump put exists, and hopefully that shows you. Now, all eyes are on March, especially for the FOMC meeting, March 19. I think it's the FOMC. Correct me if I'm wrong, guys. And then, I think there's definitely going to be no change. In fact, the betting markets are suggesting 97% no change. And I agree with them. But the big thing is basically talking about, seeing how Federal Chairman Jerome Powell talks. Is he going to be dovish or bullish? Dovish or hawkish, right? Shows you where I stand, right? Dovish or bullish. We already talked about our Clovers moving more towards Palantir's type movements in terms of tech versus healthcare. Now, I went ahead and posted this. It's a pretty good comprehensive analysis of the flywheel business model. So I recommend reading this. I'm not going to go ahead and sit and read it. It is really important though. So you should read it. But the biggest thing here ultimately is you got smarter AI that lowers costs. Lower costs equals better benefits equals more patients, more data, smarter AI. We'll talk more about it. But ultimately what ends up happening is MCR goes down. It's been going down, 106, 91.8, 86.6. Correct me if I'm wrong with these numbers. Again, I'm a one-man show. I'm doing this all on my own while trying to manage a nonprofit. a business and medical school research. So, give me some slack if I get these wrong, but I think this is accurate. But ultimately, the 3-year average is around 94.8%, which is above 80%. They need to have a rolling MCR of above 80% or 85% to essentially qualify for the individual small groups must spend 80% of premium, large group and plans 85% or more. So it depends kind of where Clover basically focuses on and where they are in, because they are kind of a small player here, right? But we'll see. Let's assume they're worse and say 85, right? So the thing is their ultimate cumulative MCR over a 3-year period, which is what CMS looks at, is still above 85%. It's actually 94.8%, which is actually good. And it's like, this is good because ultimately it's why they were able to have a lower MCR this year. So they were able to get away with a lower MCR, which is actually pretty sexy, right? So let me kind of explain to you this flywheel business strategy here, okay? So ultimately, they go ahead and grow memberships. So they grow 27% in membership growth, 30% membership growth, which translates to 37% revenue. The AI delivers better care, clinical recommendations, and improved healthcare outcomes and quality of life. The only issue is these new cohort of patients are going to burn cash, but that's actually good because it drops their MCR for that year, and that lower MCR will offset the. I'm sorry. Let me rephrase that. It increases their MCR because their costs go up because of these new members, right? So ultimately, this increase in cost will offset the 2024 decrease in MCR. So ultimately, in the rolling 3-month period, they're continuously chasing their tail to ultimately be able to essentially gamify the system to have always have a kind of above that 85%, which is actually pretty good, right? Or above 80%, depending on kind of where they are versus smaller or not. I need to recheck that, right? But regardless, it doesn't change where we're headed. We're still headed the right direction, right? Warren Buffett said, 8 plus 8 doesn't have to be 16. It can be 14. It can be 17. It can be 18. Just as long as the intrinsic value goes in in an appropriate place, right? If I say, let's, for example, stock, I'm like, oh, the stock is $20, right? But all of a sudden it's like $17. Okay, that's fine. If I got it at $2 or $1, then that's great, right? The problem with a lot of folks that, they tend to basically want to, be specific at some point, and sometimes that takes extra time and everything. And, I'm only like that when it comes to healthcare because there's a margin of error is very small. But when it comes to intrinsic value, it's more of an art than a science, right? But it's funny, we use algebra and everything, but it's pretty much like an art. The point is, let's say, for example, 2024 below 80 MCR, 2025 above 80 MCR, then 2026. The people in the 2025 cohort have a lower MCR for the 2026 cohort. Then 2026 cohort drops and offsets the 2025 lower MCR for you see how it continues. It's a flywheel business model because ultimately this 2025 cohort gets total reduced after a whole year, maybe 2 years, maybe 3 years. It reduces the total cost of care, and they take this savings and they reinvest it back into the business, getting better reimbursements, getting better, ultimately giving back more to your beneficiaries, which is something that Humana's not doing. They're actually pulling out. So that's pretty good. Okay. So, we talked about this. That's pretty much the takeaway there. You can go ahead and follow me at Al Stock Trades from Twitter, right? Obviously LinkedIn too to help us out. Now, this video here, I recommend watching it. Walmart and early talks to buy Humana. I think this is a pretty good video to watch. In fact, you know what? Let's go ahead and just watch it. Let's go ahead and stop sharing the screen. Let's go ahead and share the audio version. And let's go ahead and play this real quick.
Michael, you hear this talk about preliminary talks. What does that tell you? What do you think is really behind all this?
Very quickly, this was back in April 2nd, 2018. Remember, Andrew Toy joined Clover at around, I think, November 2018. So just keep in mind, this is back in 2018. This is not right. So we'll just keep that in mind.
Yeah, I think what's behind it is if you've seen the recent reaction to these transformational deals, it's largely been negative. So the only stock that's up kind of pre-deal is Aetna, and you have obviously CVS and Cigna stocks under a lot of pressure. So I think that's why you would want to float a trial balloon. And then as we have spoken to our retail analyst, healthcare remains complex.
Healthcare remains complex. This is your way of saying you think this is very early on and not something that is about to get completed. Maybe there's other talks behind this about partnering up or something else too.
Yeah, I didn't realize until I had spoken with our retail analyst just how many hurdles there might be on the Walmart side So, my sense of it is that there are a number of things that kind of have to work through. But the bottom line reason for doing a deal like this is the rise of consumerism in healthcare, given the fact that you have the cost has gone up due to these high deductible plans.
So you think overall it makes sense? What are some of these barriers that you're talking about?
Well, in terms of the barriers, you have the Walton ownership that has to be dealt with. You have the current debt level. You have this as an area that has played a role for Walmart in healthcare, but obviously we'll get a lot more focus when you pay 50-some billion on it. So I think that those are some of the elements to it. But I think there's a lot of opportunity with this deal. I think the longer term question in healthcare is how much of it will be a touch business, which in my opinion will always be, and that means you need a physical presence, versus how much could be done through telemedicine or online. And so I think the key for Walmart will be to access the home health element here, and Humana's focusing on senior citizens.
Okay, I want to go ahead and pause this. He's pretty much said access to home health and senior citizens. So let me just tell you something, guys. What do you think Clover's doing? They're pretty much hitting the home health, right? That's pretty much what they're doing, right? And they get access to the senior citizens. So it's very clear that's pretty much been their plan. This is in 2018. So you could see the overall thesis in what Clover's doing. They're not just willy-nilly doing this, right? So again, if you want to watch the full video, you can go ahead and type in Walmart and early talks to buy Humana. I'll go ahead and I'll just take this thing here. I'll open up the our Clove chat and go ahead and put this in. Thanks you, Gecko, right here. So yeah, here it is. So there it is. So there's that. Okay, so yeah, so that's pretty much it right there, guys. So the big thing here, though, is back in 2023, the Humana CEO, I believe, was caught in Arkansas having a meeting with Walmart. So potentially these deals may arise again in terms of Walmart trying to get into this Medicare Advantage space, because then, those old folks can, elderly folks can start using and shopping at Walmart, right? So that's what they're trying to tap into here, right? So, Humana is dropping $249 back when, they were talking about buying Humana. It was actually a $37 billion business. So technically Humana should be worth $60 billion, given that everything doubled, but it's, worth less. So ultimately, if I was Walmart, I think Walmart's looking at this, right? Because, 5 years ago, if you would have invested in Humana, you're down 20%, meaning that if you put in $100,000 5 years ago, you would only have $80,000, right? So it's very clear that, this is a very significant drop. And interestingly to see, I don't think United Healthcare is faring up that well. It's down as well, given that's, all the crap that it's dealing with. So 5 years, still up, but ultimately definitely down. In fact, if you go to peak to trough here, peak to trough, we're actually down 21.87% off of a behemoth of a company like United Healthcare. It's interesting kind of what they do, especially maybe potentially they can sign a deal with Clover Health. Now maybe Molina, right? I don't know, but if they get a big player, goodbye with $3.50. Stock's gonna be a lot higher. Okay, so big thing here that I wanted to point out with the Peter meeting with Lyrinx is that their home health platform, the home health longitudinal care, it's MD led. That's huge. Having MDs is huge. Okay, they get tens of thousands of hours of training and residency. They are well equipped to look at things. They go through a lot of, I would know this, right? They go through a lot of hell to get that MD, and ultimately you would want an MD to providing for you. Okay. I think it's better healthcare outcomes, right? Please comment if I'm wrong. Right. So this is how the AI Clover Health looks like. I'm not too sure if they're giving out too much info, but it's pretty basic if you ask me. But looks pretty good. And now with this whole generative AI, I can't wait to see kind of how Vertex gets integrated with the Counterpart Assistant. The big thing here is that it's about early identification. It's they're going to grow beyond Clover's core market, so meaning beyond New Jersey, South Carolina, Georgia, et cetera. Their new SaaS and tech-enabled services. It shows it's an AI-powered proven technology. They wouldn't make these comments because if they did and if they were false, we could sue the crap out of them. So that's kind of, and they've been sued. So, when a company that's early in its stages, especially when it has competitors that, that are breathing down their necks, they tend to make accurate statements. So I believe in these statements, and the fact that, they're not going to go ahead and say something not true. Obviously there's risks that you can read in the annual 10K report. They're outlined there, and it's a pretty good comprehensive list if you ask me. But I think that, this is true. They have do, it is showing there are decreasing costs, and they're doing it right. And the big thing here in this video, they do talk about how they're looking for a company that ultimately is wanting to decrease costs, and they're talking about pretty much what Clover Health is doing. In fact, I think this guy's name is Kevin. Is it from what's that show called with Mark Cuban? Shark Tank. He's also talking about AI or not AI, digital data and being able to decrease costs. Let me just kind of get him with his eyes open. Yeah, I'll say he's just talking with his eyes closed, right? But he has his eyes open here. So essentially, what they're talking about is pretty much Clover. And I just find this interesting, and it shows you how crazy Wall Street is. If you go to our quantum charts and go ahead and type in Clover real quick, you're not really seeing a lot of movement in terms of chatter, but you are seeing a stock price increase dramatically, as you can see here, right? But if you look at institutional ownership, there are spikes. There are spikes and increase in institutional ownership, ultimately overall bearish. So they're not going to tell you that this is bullish because that's just who these people are, right? But ultimately, there's a lot of moves in the background right now happening for Clover, right? So there's that. We talked about this. We talked about this. We talked about that. And now they're just, essentially doing their home health, which helps with readmission, which also ultimately reduces hospitalizations, which decreases costs. It's an MD-led primary care team, which is huge. That's for the highest acuity population. That's really huge because imagine if there's a patient that, didn't take their medication, they're able to be alerted that they didn't get their pharmacy medication for, let's say, furosemide, which is the, loop diuretic. And let's say, for example, they get edema, which is swelling, and, they're, volume overloaded. So before they get hospitalized for that, they could go ahead and attend for that. And maybe potentially, the Clover assistant can recognize patterns like, hey, this guy is fluid overloaded and potentially, he's, going to go get hospitalized, and, they can quantify using 100,000 patients, quantify it and turn that into 100 million basis points. 100 million AI points. So taking 80 to 100,000 patients and acting like you have 100 million patients. That's what AI does. Again, I do research in AI. I've seen a lot of companies, especially in neurosurgery, where they go ahead and use spinal stimulators, and the stimulator gives for pain, it gives the correct type of stimulation based off of 100,000 patients, which transfer to 100 million data points to be able to personalize its pain control for you. So that's kind of what this is, right? Okay, so there's that. 2024, they got strong AEP growth, which we talked about. Revenue, even with this, them tapering down, grew 9%. We got that adjusted EBITDA crap, right? But big thing is here, operational cash flow, 82 million. Obviously, you can subtract that 47 point whatever million, which drops you down to 30, but that's discontinued. So ultimately, I think that's going to be removed. I think that was ACO. So we'll see how that plays out, and we can compare it Q1 to Q1. So Q1 to 2025 to Q1 to 2024, and compare those discounts, right? And look at it even deeper under the hood. Industry leading loss ratios. They switch to BER next year. Interesting to look at that. Hopefully they also report MCR, but it's usually historically 5 to 6% off, meaning, BER is a little higher, given that it incorporates most likely stuff, other care necessity things that are more holistic. Membership growth plus 30%. Insurance revenue $1.8 to $1.875 billion. Now they're adding the adjusted net income 45 to 70 million. The big thing here for the tailwinds for 2026 is their position for strong membership growth again. So you're going to see a strong MA membership growth. And they're saying that they finally were able to answer my question in regards to disruption. Regardless of Trump presidency or Kamala or Biden presidency, the disruption is going to continue. Healthcare stocks are still going to get more pain, which is great because obviously you can see it for Humana. Humana is now under $250. 4-star payment comes into effect, which ultimately increases their, gross margin by another 5% in terms of them translating it into free cash flow and hopefully net income. The continued cohort that they basically got in 2025 is going to be year-end aged, meaning that the MCRs will hopefully start to be able to reduce, which ultimately adds to their profitability and efficiency program impact. Okay, there. So now basically you're starting to see the average Medicare Advantage membership go from 81,000 to 105,000 with a 30% growth rate and equivalent to a 37% revenue growth rate. The average MCR differential cohort by year is year 1 to year 2, 700 basis points to 1 point, so 1,500 basis points. The big issue here is this is the overall, it says by cohort year, and then it says Clover Health information represents incurred membership data. So I don't know. This is again services including 2021 and 2024. So I think it's a conglomerate of all the patients they had from 2021 to 2024. I would rather them see new cohorts, isolate new cohorts. And I think that's what Leerink asks. And he said it's relatively stable, which is okay. Not the best. Because I want to see how long it takes for the new cohorts for them, their MCR basis points to actually go down. But it's also kind of good because it honestly keeps raising the MCR higher on a 3-year rolling period, which will allow them to continue kind of chasing their tail. Right. All right. Good. So ultimately, this is the overall model, right? You grow memberships, right? Deliver better AI clinical recommendations, improve quality of life, right? Better medication adherence, better CKD control, diabetes management, all the white papers that they talked about, right? Then reduce total cost of care with the 1,000 basis point plus reduction, then reinvest in membership and be able to basically sustain and pay commissioners for the to recruit beneficiaries, approximately $300 per beneficiary that people that sell insurance make, and then and then that ultimately gets improved in star ratings and hopefully goes to 4.5 stars, and that'll grow memberships and you get Clover Assistant usage, and it's a positive flywheel model that I learned from Amazon, right? So the goal is take advantage of the MA market opportunity due to the competitor pullback. That's what they're doing, and that's what they're what Andrew Toy was saying. As competitors pull back, we're going to pull in, balance profitability and reinvestments, kind of offset the growth rate with the net income growth rate. Better clinical quality and outcomes, essentially maintain 4 stars and hopefully potentially go to 4.5 stars. Let's see. Counterpart health expansion, equip more clinicians and more market and counterpart assistant technology. This is actually a pretty good deal because then ultimately they said that they have both regional players and state players. Going back to my friend here, Market Cap, give him a follow. Big news coming for Clover. He's, this is a quote from I like how Market Cap does this. He gives these nice quotes, and I almost want to print these quotes and put them on my big house in the future, the Clover House, right? The Clover Mansion, right? The pipeline is strong, right? The pipeline is strong, right? More news to come in the pipeline. We have both regional players, but also national players. The big focus here is on national, right? So we're going to see what these national players are all about. Now, here's the thing. Let's cut to the chase. No one believed in Clover. People were laughing at Clover within the other healthcare insurance providers that are huge in New Jersey. But they said, we have a software. They're like, we don't want your software. Okay, they're like, fine, we'll just start an insurance company. We'll show you how the software works. Well, it did. And now they're in the top 10 HEDIS score. In fact, they're top 1. So it's very clear that the software works, right? And they're the only PPO that is ranked top 1. So ultimately, that should basically share with you and tell you that this is working. And now you have analysts. Now, when you go ahead and actually listen to the recording, it actually now shows you the PowerPoint presentation in accordance with what Andrew Toy is basically saying. Given that feedback and investors, they probably pressured Leerink to do that because now people are starting to take it seriously, saying, hey, you haven't been taking this company seriously. You've been BSing. I'm paying you over $100 million to manage my portfolio, but you're not able to give me those 300% returns. What the F is this, right? And this is why I'm telling you the democratization, being able to think for yourself and giving you guys over 2.5 billion outputs of institutionally graded data is actually very powerful, right? So this is why we have that flash sale, coupon code FLASH, take $500 off. Take advantage of this, right? Because we are creating life-changing information. We have literally multi-millionaires in curation in our platform. You get access to over $44 million plus of net worth. And soon we will go over $1 billion, right? It's just a matter of time. Okay. So anywho, big thing here for Clover, you go ahead and do the support and resistance lines. Again, this is all part of our AI, right? Our AI from the Al Stock Trades Technical Analysis Terminal, or the Premium Stock Terminal. You can see right now we're at that 363, trying to fight that. Let's go ahead and look at the fib. You can see the fib kind of bounced off of here. Here's the support line here for Clover, bounced right off of that 324. You can see how powerful this is. Now the question is, are we going to, you could draw a line here. This is the upward channel. This is the downward channel. The upward part of the downward channel, the downward part of the downward channel. We could probably be tracking down here, and we probably may go down tomorrow, right? Ultimately, we'll see, right? The big thing here, and the reason why I think we're going to go down, that's why I'm a little cautious. That's what the title of the video, Caution Ahead, is, because if you go ahead and look at Apple, because again, Apple constitutes a lot of the S&P 500, it actually broke some key resistance levels. So I'm looking at Apple to stabilize at around potentially right around here at around $2.10, $210. So I think potentially the S&P could go lower. I'm not too sure, but I don't think that we are out of the woods yet. I think we need to find some stabilization in these types of stocks. And once we do, and the RSI gets a little bit oversold, then I think we can finally start rebounding in the S&P 500. Given that, as what that individual said, Clover is now finally tracking with the S&P, but more specifically to tech stocks, because majority of the S&P 500, in terms of the majority of the net worth, is actually from technology stocks. It's the biggest, right? And I think healthcare is the second biggest, right? And obviously, Clover's not moving with healthcare because healthcare is down today. Okay. So there it is, guys. In fact, let me just verify that statement really quickly. So let's go ahead and go to the Al Stock Trades platform real quick. And let's go ahead and go to the sector performance overview. Again, let's go ahead and go here so you can see real estate, energy. Here's industrial technologies. And then where's healthcare? Healthcare is down here. So obviously healthcare underperformed. Okay, good. So it's just like we said. All right. So there it is, guys. Honestly, it's very simple. I'm, just chilling right now. We could do the advanced technical analysis, initializing AI engines. We got 3-2. Not bad. We can go ahead. Again, market sentiment. Look at Palantir. Our smart, again, this looks very simple. I like to make things Apple-like, very simple. But the problem is there's about 20,000 to 50,000 lines of code here. This is smart money, dumb money in terms of their institutional investors and retail investors for a specific stock. This is our market sentiment intelligence. And you can see once we run the analysis, you can see that smart money became bullish here when the stock was around anywhere between $5 to $10. And then after it became bullish 6 quarters out, the stock price pretty much 10x, right? You go ahead and put Clover and you scan for smart money and you look at Clover and it just basically became bullish. So imagine 6 quarters out from now, what do you think is going to happen to the stock price? I think you can essentially go ahead and you can go ahead and create your own idea for that, if you know what I'm talking about, right? Welcome now, Stock Trades, mother. All right. Hell yeah. All right. So there it is. I'm very excited what we created. I'm like freaking stoked, right? You could put it together where this is headed, right? So, okay, there's that. So here it is. Here's Clove. So we're tracking up again on the quant flow. Still a lot of selling pressure. So I'm expecting it to go down. Rebound, but still negative. 3 months here. We're slowly trying to track positive. Now, we just need to have that Al Stock Trades proprietary quant flow to be above the line here. So hopefully can rebound into that, right? So we're slowly starting to rebound out, which is good. And ultimately, just another, just some more time. We just need just a little bit more time, okay? In terms of the overall sentiment, negative. That's why it's low. If you run the market, if you run the machine learning analysis, is mildly bearish. So we're just going to have to figure that out and see kind of where things are at. We could go ahead and do projections, but I just want to just look at the price of sales. Price of sales, I think as of right now is 2.63. Is that right? I don't think this is right. I got to recalibrate this. Oh, wait. Yeah, maybe. I don't think that's correct. Let me double check. Yeah, it's not correct. The stock price would be around $6.80. So I got to take a look at that because that's kind of what it's saying. Yeah, that's not correct. So I need to, interesting. I need to figure that out of why it's saying that. Yeah, it'll be an easy fix. So I'll go ahead and put this here. Fixed price to sales for projection analysis. Okay. So there's that. But, interestingly, you go to price of sales here and it shows you price of sales of 1.13. So I don't know. We have it accurate here. I just need to fix the code. Again, I don't really use this a lot. So that's good. I caught it right now. The whole point is I created this whole thing on my own. And I just want it to be, I'm not like some economist that, hasn't made any money that's trying to sell a software. I'm actually a guy who's in the market for over 10 years and I'm on the ground, I'm on the war field, I'm on the battlefield, and I know exactly what I use. And this is what I use. And I share it with you guys all lifetime access, right? And we have an educational platform that has over thousands of pages soon to be about in terms of education, right? So it's the real deal, right? Okay. So that's all I have for you guys. Show me the money. Al's the man. The man. Al himself created the best platform in the world and changing many lives. And that's what we're trying to do. I know it sounds crazy, right? I get goosebumps just thinking about it, right? But when you put God first in everything you do, you can accomplish extraordinary things, right? This is the power of the United States, right? And it encourages you to think outside the box, to push you, to really motivate you to push boundaries that people have never seen before, right? So very excited, going from homeless to becoming Jesus Christ. Homeless to becoming Jesus Christ. That is hilarious, right? I'm gonna start growing out my hair, right? I love you guys. God bless you all. And that's it. I'll see you on the next one. Peace.